The Fed has said they want inflation. So what do you do? How do you invest? What do you do with your money if you know inflation is coming? I've got 4 tips coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Welcome to this channel. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so the Fed has come out and said, hey, enough with these low interest rates and this low inflation averaging less than 2% actually, which is their target. We want inflation. We need a flexible target, and we're okay with an average inflation of 2%. And because current inflation is below 2%, we've got to get higher. So what do you do? What do you do if we're going to see inflation? Let me tell you what legendary investor Stanley Druckenmiller has said. He says he's actually very, yep, 2 verys, you know it's serious, worried about the next 3 to 5 years. He actually thinks we could see 5 to 10% inflation in that time because of what the Fed is doing. That is crazy. That's crazy. If you think back over the next 10, even 20 years, you might say, inflation. What's to worry about? Guys, just a couple decades ago, that was the #1 financial concern out there, was inflation, and inflation being too high, overheating. And the Fed has done nothing but said, we promise to make sure we keep inflation under control. It won't get too out of hand. I mean, how much can you trust them? Do you believe that all of their policies will work? So anyway, I'm not going to speculate about whether inflation gets way overheated and overwhelming, but instead I want to ask a more simple question. What should you do with your money, with your dollars, with your investments if we're entering a phase where inflation actually might be real, might be higher than what we've seen in the past? What do you do? What does well in inflation? I've got 4 ideas for you. The #1 thing that I would tell you you're not going to want to hear. Stocks actually do very well in inflationary times. Why? Because the stock market is the value of companies. It is the value. The S&P 500 is the aggregate value, market cap determined by traders every single day of what is the overall value of the 500 largest companies based in the US. So if we've got inflation, that means costs are going up. And if costs are going up, that means revenues are going up. Hopefully profits are staying in sync with inflation as well. That means companies are worth more because there's inflation. Companies are worth more. And if companies are worth more, what does that do to the stock market? Makes the stock market go up. That's as logical and as linear as you can make it. Now, will it be a nice, steady, flat ride? No, of course not. It's stocks, it's volatility. I told you that the stock market's the aggregate opinion of the valuation of the 500 largest companies based in the US, determined by traders each and every day. Well, each and every day, there are millions of people saying, this company's actually worth this, no, it's worth this, and they bid and they trade against each other to determine a flowing price. So it's going to be very volatile, but if we put a pin in today and we put a pin in 5 or 10 years from now, and during that time, if we have higher than normal inflation, stocks should do okay. All right. Now, right now, is some of that already priced in? Is that why stocks have surged and we're at threatening PE levels? Maybe I am nervous about how elevated the stock market is right now compared to earnings. We might have borrowed too much of future expectations in setting today's prices. It's very possible. But during inflationary times, stocks tend to do well. That's the first one. The second one is also quite linear as well. During inflationary times, real estate does well. Real estate does well. So again, inflation at its very core is prices go up, prices are higher. Well, the price of what? The price of lots of goods and services and so on. But yes, the price of real estate, whether that's an office building or whether that's a house or an apartment building or a condominium, right? Real estate tends to do well during inflationary times. The value of that asset likely gets bid up due to inflation, but you guess what else does? Rent. Rent does as well. So rental real estate, your rental prices, your rental rate might go up, making that rental property worth more. For office buildings, for malls, no, those are going to be empty. For strip malls, no, those will be empty too. But for commercial property, those rents will go up with inflation, and that makes those properties worth more as well. So if you own real estate, you should see those values go up. Now, if you own real estate as an investment, not just your primary residence, but if you own real estate as an investment, whether that's a real estate mutual fund that you own in your portfolios like we do, or whether that's some sort of rental real estate property you own, a property of portfolios that you own, maybe some commercial properties, you should see, again, not in a linear fashion, but if we do see rising levels of inflation over the next 5-10 years, then we should see real estate as for each of those investments, your primary house, your real estate investment mutual fund, your rental real estate, any commercial real estate, you should see those appreciate in value as well. The asset go up in value, and any income that you're getting, that mutual fund, the rental property, that commercial property, that income should go up as well, keeping pace with inflation. That's the second idea. Now the third idea, if we're entering into a time of higher inflation, and that is the very, very, very boring Treasury inflation protected securities, often known as TIPS. Now, Treasury inflation protected securities right now at this, hey, everything's either going to be great in the economy or we could see a financial apocalypse. In that scenario, depending on which side you gravitate towards more, you might like the comfort of having some government-backed investments. Well, you know, government-backed investments right now, they're paying nothing. They're paying nothing. What is it? 80% of bonds being issued today are paying less than 2%. That's outrageous. It seems like I was just on the radio bragging about how you can actually get interest in your savings account now. I checked my high interest savings account, which was just paying 2% a few months ago. It's now paying 0.5%. That's disastrous. That's embarrassing, especially if we're going to see inflation over 2%, right? So Treasury inflation protected securities, that's the watch the grass grow, watch the paint dry sort of investment, but the interest or there should be an adjustment made to that investment if we see inflation going up. Guess what? We've already seen TIP investments skyrocket in value this year. I checked our TIPS investment that we use for our models here, and again, it's not in our momentum strategy. It's not in dynamic because there's not a lot of momentum happening in bonds right now. The momentum is intact, it's in growth. But in our core strategies, our strategic strategies, the more index type of approach, diversified buy and hold, our inflation protected security fund is up 8-9%. Which is just astounding. So if we're going to see higher levels of inflation and you want a more conservative or less volatile approach, but not get clobbered by inflation, Treasury inflation protected securities or TIPS should do well. All right, so stocks do well, equities do well in inflationary times. Real estate definitely does, whether you own it just as an asset or you own it for income. TIPS, Treasury and inflation protected securities. And then the last one, believe it or not, yes, gold and silver tend to do well during inflationary times. The struggle that I have with gold is there's some empirical value, but there's no calculatable value. I can't tell you mathematically what the value of gold is today versus what it should be tomorrow. I can tell you that the current price of Apple stock, for example, or even Winnebago or whatever, I can tell you how that value is derived based on the revenue and the profits of that company and the expected profits and the dividends, all of that jazz. I can mathematically derive a value of Apple, and then I can compare it to what the stock market is trading Apple at and say this is a good value or not. I can't get there with gold. I can't. However, when goods and services cost more, i.e. inflation, typically that means gold. Gold and silver will cost more. And so holding gold or silver, those precious metals, should actually do well during inflationary times. What about all commodities? Possibly. In aggregate, the answer is yes, but individually it might be no, because there's a lot of other factors. Will gas and oil, will it actually keep up with inflation? Or will we be pivoting, will we be substituting away from that natural resource into alternative forms of energy, and therefore oil, even during inflationary times, will not do well? I don't know, but overall gold, silver should do well. Commodities do, as a general basket, do tend to do well. So there you have it. If we are entering into a more inflationary time, if Stanley Druckenmiller, our legendary investor, is right, and we should be afraid of overwhelming inflation, then these are your four options. You got equities, you've got real estate, you've got tips, and you've got gold, silver. So my question for you then, as we look to apply, is, well, then do you jump in each of these right now? If you look at each of these to the penny, they're all extremely high valued today. The stock market as a multiple is trading at 20-year highs. Real estate, I almost said a bubble. Real estate prices are extremely high. We have a housing boom right now. I told you how our TIPS index is up 8-9% year to date, and gold is threatening, it's knocking on the door of $2,000, its highest price ever. Each of these assets, investors have gotten ahead of this and said, well, if we're going to see inflation, we're bidding prices up today. So should you jump into these investments, make sure that your overall investment approach is connected to your financial plan. Each of these, they might already bid up. And if inflation isn't as high as what Stanley thinks, then these investments could plummet, could not do so well. So make sure you're managing risk and your investment approach is connected to your overall financial plan. Contact your CFP to make sure you're taking the right level of risk. You need a CFP, you need a second opinion. Reach out to our team at Korhorn Financial Group, korhorn.com, that's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.